Good morning and welcome to today's webcast, the R&D Tax Credit, Benefits for Your Construction Company. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the Slide Deck and Handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you one CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the Slide Deck and Handouts widget. Please have all group members sign it and send only one sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams, Shane Hunt, Senior Manager, and Josh Jirava, Manager. Shane has been in public accounting since 2008. He specializes in R&D tax credits and incentives for construction companies. Prior to joining Moss Adams, Shane worked for a private civil construction company as an estimator and project manager. Josh has practiced public accounting since 2014. He is a member of the firm's R&D Tax Services team and is a certified public accountant in the state of Washington. Josh works with businesses to claim tax credits and reduce companies' tax liabilities when performing research and development activities. And with that, I'll turn it over to Shane to get us started.
Thanks, Emily. First, to start off saying welcome. Thank you for joining us today. The overall goal of today's presentation is to give you guys some information about the R&D tax credit that hopefully helps you start to be able to determine if it's something your company can benefit from. In order to do that, we think, we'll touch on some key areas here that I'll run through real quick. Understanding the benefits of obtaining the R&D credit, the introduction. We'll give you kind of an introduction to the R&D tax credit to kind of help determine if there's some activities you guys are doing that you think may fit into the R&D bucket. We'll go through what an R&D tax credit analysis or study looks like. We'll also discuss kind of what we've seen recently via the IRS or state examinations. We'll look at some of the challenges to think about when you're trying to determine if the R&D credit makes sense for your company. We'll go over a few legislative updates that have come out with some of the tax law changes, a few of the relevant court cases that have been out recently, and then lastly, we'll just kind of review what the key takeaways we hope you're walking away with to help you guys, again, understand if the R&D credit may be something that you guys can benefit from. So to start, we'll go through the understanding the benefits of obtaining the R&D tax credit, and let Josh take it from there.
Thanks, Shane. Yeah, so, the key takeaway and the benefit for taking the R&D tax credit is that for every dollar your company spends that's deemed as a qualified R&D expenditure, you get roughly between 5 and 10% back as a tax liability reduction. So for every dollar spent, 5 and 10 cents comes back to the company. And that is at a federal level. In addition to that, there's many states that also offer an R&D tax credit. So not only could your company potentially have a federal benefit, but there could also be a state benefit. And you'll see here on the screen there are 39 states currently that offer an R&D tax credit. So you might see your state on here, or maybe you don't, but this list does change, pretty regularly. So keeping up to date, even if your state's not on here, it may be in a future year.
And that's good to note. And also, while the states typically follow the federal rules, they do kind of have some of their own twists, or there's some differences. So it's not only important to check, if your state has one still or may be adopting one soon, but understanding if there are differences in the rules and looking at that is important as well.
For example, Oregon currently doesn't offer an R&D credit, which it has in the past, but they are in the works of potentially putting it back into place. So this list might change even in the next month or two. So you'll see here's kind of some case studies that we've seen in the past, and some estimated annual revenue for each type of company, as well as kind of the potential tax savings related to taking an R&D credit. You'll see here like a mechanical contractor with $130 million of revenue saved about $800,000 in tax. We have some bridge builders, concrete contractors, as well as engineering firms. But you'll see here, it can range, and it can be pretty significant savings at the end of the day.
And I'd also point out, if you can kind of look through the list, you'll see that the gross revenues don't necessarily affect the amount of credit a company can receive. So, if you're thinking you're a small company and it may not apply, you'll see there's a GC there that, gross revenues of $19 million walked away with $250,000 in credit. And in turn, you'll see an engineering firm or a software, that had $150 million in revenue and walked away with $150,000 in credit. So the size of the company doesn't necessarily determine the amount of credit potential that's out there. It's the dollars that are being spent.
So, there's a couple advantages to taking the R&D credit. Number one is it increases your positive cash flow. At the end of the day, there's more money in the bank. And then the second is taking the R&D credit can offset some project risk. So a lot of times we see with projects that are qualified as R&D, they're challenging, or they're new, or they're not easy projects for your company to accomplish, and that brings a lot more project risk, and this kind of helps offset that. So that brings us to the first polling question. Emily, you want to take it away?
All right. Our first polling question: true or false? There are cost savings benefits and competitive advantages to obtaining the R&D tax credits. So let us know if you think that's true or false. I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit submit. And if you are having any difficulty seeing the polling questions, you can try refreshing your browser with F5. I'll give everyone a couple more seconds. And let's go ahead and take a look at the results. Back to you.
Great. So, sounds like everybody's on the same page. There's cost-saving benefits as well as advantages for the R&D credit. So the next part of the presentation is kind of it's an introduction to the R&D credit and really trying to give you a base understanding so that you know if your company qualifies or not. So to start off, we'll do just a brief history of the credit. The R&D credit was enacted in 1981 by the Economic Recovery Tax Act, And the reason for the R&D credit was to promote technological advances within the United States in lieu of some emerging technologies that were coming out from Germany and Japan. Now, in the past, the R&D credit hasn't been a permanent tax credit, and every few years it gets put back on the table. Should Congress has to decide, should they keep it, or are they going to let it disappear? And in 2015, luckily, the R&D tax credit became a permanent measure, and going forward, this is a tax credit available to taxpayers. Now, there are two calculation options to calculate the credit. There's the traditional, also known as the regular calculation, and then there's also the alternative simplified credit calculation method. And then finally, between 2008 and 2019, there's been some significant court cases that kind of clarify and talk about some areas of the R&D credit, which we'll go into later.
And I'd just point out, in case there's anybody out there wondering, if this has been around since, the mid-'80s, potentially why haven't I heard about it before, or why haven't I been claiming it? And kind of what Josh is touching on there at that last point is it's kind of been an evolving process. When it first came out, there was some, it was restricted to certain industries, or some of the activities had to meet certain, criteria that have since been changed or modified. And so throughout the years, the R&D credit has kind of evolved, and it's just been within, I'd say, the last 4 or 5 years specifically. We've seen where, construction companies, it's basically opened up to include them as, one, the IRS and the laws have changed, and two, we've seen some court cases come out that kind of help us understand how construction companies can qualify.
So how to identify potential R&D? Now, some of the questions that I like to ask, and you'll see here on this list, is your company designing processes, constructability, means and methods, techniques to try and improve, overall efficiency of a project, improve the quality of what you're delivering to the customer, or just improve the overall performance of the final product itself. Another area where we see R&D activities is in design-build contracts. Innovative concepts, or there's maybe components within the design-build contract that kind of are new to you, or you have to make improvements to it. Now, design-build contracts aren't the only areas that we see R&D. A lot of cases we'll see contracts where it's more of a design assist role, and so you'll get plans, but then you'll have to make modifications and kind of really figure out the details so that you can actually execute and complete the project successfully. That's an area that we'd want to look at as well. Does your company have an engineering department or engineers on staff who are utilizing CAD modeling or BIM design or some other types of modeling software to be able to kind of figure out some of the areas of issues on the upfront of the project? Has your company done any prototyping, modeling, any kind of trial and error testing? Did you build something at the yard, make sure that it worked correctly before you went and implemented it into the field? Are you kind of working with specialized equipment or tooling, or developing some sort of piece of equipment that can kind of do a task that's unique and hasn't been done before? Are there any significant improvements to the overall means and methods process? And then, are there any product development departments? And does your company have any patents? Are you filing for any patents to protect your intellectual property?
And I'd point out, Josh talked about, are you guys doing anything that hasn't been done before? And I want to point out, it doesn't, for it to qualify as R&D for your company, you don't have to be doing anything new to the world or even new to the industry. Other competitors or companies can be doing the things that you guys are attempting to do, and it can still qualify as R&D for your company.
So how is R&D activities defined? Well, there's this 4-part test. And you have to meet all 4 parts for something to be considered an R&D activity. And we'll go through those 4 parts now. The first one is technical uncertainty, process of experimentation, technological in nature, and qualified purpose. So technical uncertainty. It has to be an activity where you're trying to overcome some uncertainty at the onset of a project. Are you uncertain about if you're capable of completing a task? Are you uncertain about how you're going to actually construct something? Or is there some concern that the design is going to be appropriate and it's going to work the way that you want it to at the end of the day? There has to be some uncertainty at the onset of the project. Just because something is successful on the first try doesn't mean it's not R&D, but it's really just a question of when does that uncertainty end? And to try and eliminate the uncertainty, there has to be a process of experimentation. And so there's 1 or more hypotheses in the beginning, and then you're conducting some sort of tests, or maybe you're doing some modeling on the computer, mathematical calculations, to try and eliminate that upfront uncertainty. And maybe that uncertainty was eliminated before you go out in the field, but maybe it wasn't, and there's still some uncertainty into the actual installation of whatever you're building. This is an area of focus kind of as of 2019 due to a recent court case. And so, this process of experimentation, what did you do to figure out the uncertainty, is an important area. And technological in nature, that's the third part. And it's really just, is it related to a hard science? Is it physical science? Is there a biological science involved? Is there some sort of engineering involved? Or maybe it's computer science? The tax code just says that it can't be related to, arts, humanities, social science. It really has to be embedded in some type of hard science. And then finally, it has to be for a qualified purpose. So you're developing a new or improved, business component, and maybe you're trying to improve the functionality, the performance, the reliability, overall quality. And this business component can be, the final product that you're delivering. It could be a process, a means and methods that, you're working through to be able to be more efficient. Maybe it's a formula, a technique, or an invention. And you're going to either use it in your trade or business, or you're going to hold it for sale in the future. So now that we kind of understand the 4 different parts of what an R&D activity is, we have to talk about the qualified expenditures. What costs can we include in the R&D credit calculation? And there's 3 main costs here. There's wages, there's supplies, and there's contract research. So first with wages. We want to capture all the people that are directly performing the R&D activities, but we also can capture the people who are supporting those R&D activities or directly supervising those R&D activities. So for example, maybe there's an engineering department and someone's actually doing the design. Not only can we capture their time, but we could potentially capture their supervisor's time, as well as anyone that's kind of in a supportive role helping with, those R&D efforts. Secondly, there's supply costs. If, for example, you are in the field trying something new, trying to improve something that your company has never done before, and there's risk that you would have to maybe rip everything out and start over at the onset of the project, you're not sure if what was designed on paper is going to work correctly, then we'd want to look at all the supply costs involved with building, maybe the entire project or maybe just a piece of the project.
and also point out in the supply side of things, kind of the low-hanging fruit there is if anybody or any of your companies are doing any kind of mock-ups or prototypes that aren't, ultimately, a part of the finished product or building or structure that are just built for testing and then scrapped. All of those materials that go into anything like that would be qualified as an R&D material, and we could capture the costs related to those.
And then there's contract research. And these expenses are related to subcontractors that are supporting or performing a portion of the R&D efforts. So maybe there's a specific means and methods that your company is not doing, but you're hiring a third party to kind of figure out that process. And it's required that they do their job successfully so you can build the final product and meet the customer's expectations. Then those would be costs that we'd want to look into as well. And that gets us to our next polling question. Emily?
All right, our second polling question, another true or false. You must wear white lab coats at work to qualify for R&D tax credits. So let us know what you think of that. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. Give everyone a few more seconds here to make a selection. And let's go ahead and take a look at the results. Back to you.
All right. Thanks, Emily. And I would point out, you don't have to wear white lab coats. If you choose to, great, but hard hats, tool belts are also gear that people wear that we found fit into the R&D bucket. All right, so moving on. So an R&D tax credit analysis, basically, an R&D study, we want to give you an overview of what that looks like so you guys have an idea of what it kind of the information gathering process looks like when you're engaging somebody to do a study. Kind of the first part of doing an R&D study is the discovery or data phase of the project. So being able to identify, which projects do we think have potentially qualified R&D activities. Identifying that list kind of narrows down, some companies that we've worked with, they do hundreds and hundreds of projects in a given year. And so we try to pare down that list to make it as efficient as possible and really narrow down to the ones we think have potential. From there, we'd also want to identify the employees or personnel that worked on the projects that can provide, some knowledge and details on the activities that occurred, and also be able to kind of tie those activities back to the job costs, because ultimately, once we've identified the activities, we then need to tie those back and capture the expenses related to those. Then we would move into the substantiation phase. This is where we would conduct the interviews with the personnel and really get into the details of the projects, identifying, like Josh touched on earlier, how each activity satisfies that 4-part test. What were the uncertainties? How did you figure it out? And at the end, what were you now able to do that maybe you weren't able to do previously? We would also, again, identify those costs, whether it's the labor costs, so we need to know the employees that were involved in order to track the time they spent in an R&D role. We would review the contracts, because outside of just the R&D credit activity requirements, there's also a funded research requirement. So it says, the company that gets to claim the credit has to have both risk and rights in in the work that you're doing. And so usually we find that by reviewing the contracts, looking at payment terms, and if there's any kind of IP rights or language in there that would limit you guys being able to say that you have rights to actually be able to perform the work again in the future. And at the end of the day, with the study, we're going to run the calculation, We're going to prepare it and fill out the forms for the tax return, and then provide the company with a report that outlines the findings, would document any law or analysis that took place, and then finally give you a kind of a summary report of what was captured and the amount of credit that was obtained. So we get this question a lot as far as IRS exams. And so I think just touching on kind of what that looks like is beneficial. So oftentimes, when we go through an exam, there are certain areas that the auditors focus on, and we thought it'd just be good to touch, highlight, bullet point those areas. So, if you ever do move forward with the study, you'll kind of know these are areas we want to make sure that, we are prepared to answer questions for. First one being, being able to connect the projects and expenses being claimed. So being able to show how the activity and the expenses tie together, whether it's through, job cost reports that have, descriptions of activities, phase codes, and being able to narrow down to those specific activities or those specific expenses is a good kind of paper trail or documentation to show that how those tie together. What did that process of experimentation look like, and who was involved in it? So, if you have test reports, if you ran through, engineering, and you have different iterations of designs, and you can show them, this is, iteration 1, and this is iteration 10, and being able to explain the differences and what kind of analysis took place. And then lastly, as I touched on before, going through the contracts to identify, who has the financial risk of failure in a project, who's at risk if it doesn't work, and then is there any rights issues that would keep you from being able to perform the same type of work for another customer in the future. Outside of a field exam, in certain circumstances, you have to go to the appeals process to get an answer. And in that case, they're not so much dialing in on it's a yes or no. They're looking at it through the lens of, if this was to go to tax court, what's the probability that you would win? So they may look at, supply costs and see, did you use estimates? Do we have things, directly tracked? Do we have invoices? Is there any, they may have some disagreements over, the credit in general of the activities that were being claimed. They'll look at the documentation side of things, and is it properly supported? Are there any holes in the documentation? And things like that. And they'll come to an assessment and oftentimes offer a percentage, potentially. I mean, there's been cases where they make no change and a company can retain 100% of the credit. But they may come back and say, if this was to go to tax court, we think you have an 80% chance of winning. So, we'll right here and now avoid that and allow you to obtain or retain 80% of the credit. And that's kind of how the appeals process works. And that brings us to our third polling question, I believe.
All right. Third question, another true or false. Obtaining R&D tax credits is always quick, easy, and straightforward with no delays or further investigation from the IRS or state taxing authorities. I think that is true or false. And for those of you that would like a copy of today's slide deck, you can download them now from the folder that says Slide Deck and Handouts to the right of the slide view. We will also be sending the slides via email after the webcast. Give everyone a few more seconds here. And let's go ahead and take a look at the results. Back to you.
All right. Thanks, Emily. You're correct. This is not necessarily a quick and easy process. That it is, the R&D credit is somewhat subjective in nature, and it's basically, identifying areas and then, being able to document and support those in a way that, an IRS or a state agency, would be able to A, understand, and B, accept. All right. So, outside of, an audit, what are some of the other challenges or things to think about when you're considering, doing an R&D study or claiming the R&D tax credit? I always think first and foremost, you should kind of consider the usability of the credit. It's great, if you can obtain this, large R&D credit, but if you can't use it, it may not be as beneficial. So, understanding what a company's taxable income is, making sure that, the credits claimed can be used, whether it's at the company level or in the case of partnerships or, S-corps, the credit would flow through to the shareholders or partners. So understanding their tax situations and making sure that they're going to be able to gain a benefit from the credit. Also understanding any kind of limitations. One of the limitations that was a bigger factor before was the alternative minimum tax. We used to not be able to take companies below that. What we've seen now, though, with C corporations no longer have that alternative minimum tax. That's been eliminated. So that opened us up to be able to claim more credits for those companies. And then also companies that have $50 million or less in gross revenues, that limitation has also been lifted. Now, if you do come to a circumstance where you do claim a credit and you're not able to utilize it all in the year that it's being claimed, you don't lose it. You can carry it back 1 year to offset any taxes paid the previous year. Or if that doesn't work, then you would carry it forward for up to 20 years, and it could be used to offset any taxes or tax liability in future years. Another thing to consider, which we've touched on a couple times now, but funded research used to be a hot topic and still is. I'm not going to say it's not anymore, but it's still something that you really need to be aware of. You want to make sure that your contracts and the language within them, shows that your company really does have that risk. Oftentimes it's determined by the payment terms. So, lump sum, fixed price type contracts are often determined that you do, that your company would have the risk versus, like a T&M or cost plus. Those type of contracts, typically the risk would fall more on the owner or the general contractor that's hiring you. Foreign research is something else to consider. If you're using any kind of engineering companies or companies that are providing a service outside of the United States, those expenses would not be eligible as part of the credit calculation. And so just to be aware of that. Now, a federal priority, it says highly contentious. I like using the word scrutinized better, just meaning you want to make sure that if you're going to claim the credit, that you've got the support and documentation you need to justify the amounts being claimed. Not every study gets audited, but the ones that do, you really want to make sure that you've dotted your I's and crossed your T's and are prepared to answer any questions that a state or IRS examiner may ask. So with that, we'll move to some of the legislative updates, and I'll let Josh take it over.
Thanks, Shane. So there's been a couple changes in the past few years related to the R&D tax credit. And this first one here is a Treasury regulation that came out in 2015. It's related to the alternative simplified credit calculation option. That's one of the two options that you can use to calculate the R&D credit. And this regulation in 2015 says that taxpayers can now use this simplified method on amended tax returns. In the past, this wasn't an option, but now going forward it is. And one of the nice things is that it eliminates the requirement to calculate something called the fixed base percentage, which is used when you're calculating the traditional or otherwise called the regular tax credit. And what that does is it makes it so that we only have to look at 3 prior years to determine how the R&D tax credit is calculated. It's a little bit easier from a kind of supportive documentation standpoint. And then it it really is just it's a favorable answer and gives us another option to make sure to maximize your potential benefit.
Yeah, and with the alternative one, that being able to eliminate gross receipts as part of the credit calculation can be a big benefit to companies. If you have large gross revenues, sometimes it can set a threshold or a bar that's can be challenging to get over. In which cases, if we can just look at the prior R&D expenses and eliminate that gross revenue bar, a lot of times companies that may not be eligible under the regular method can still claim a credit using the alternative one.
The second regulation that I'd like to cover is related to how R&D or research and experimental expenses are defined. And in 2014, this updated regulation was implemented, and what it did is it finalized some proposed regulations from 2013. And really, some of the key takeaways here is that no distinction between a new product's failure or success. So earlier in the presentation, I mentioned, at the end of the day, if it was successful on the first try, that's okay. And this is kind of where we're seeing that. This regulation also defines something called a pilot model. So maybe you're developing kind of a custom piece of capital equipment, and it's to try and eliminate some uncertainties on the upfront. So you're developing a product, or you're trying to develop a means and methods, and you have to, figure out how to use a special custom piece of equipment to get the task done, and there's some uncertainty around it. Or you're using this to make something more efficient, then we can make an argument saying that we can qualify this basically pilot model or this prototype of this item that you built. So I guess how is this regulation applied? And kind of already touched on that. Really, if you're developing an innovative piece of equipment that's highly technical, it can qualify for an R&D expenditure. And the nice thing about this is, if it's considered a pilot model, then you can immediately expense the entire cost of that capital expenditure instead of having to depreciate it over its useful life or a period of time. So where does this come into play? Are you developing new tooling, maybe some fixtures, other kind of equipment in the manufacturing or means and methods constructability process? And really, it's again another favorable area for taxpayers going forward. So that brings us to our next polling question. Emily?
All right. Our final polling question: how many calculation options is a taxpayer given to determine the federal R&D tax credit? And the options are 1, 2, 3, or 4. And once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the CPE Progress widget to the right of the slide view. I'll give everyone a few more seconds. And let's take a look at the results. Back to you.
Great, yeah. There are two options. There's the traditional calculation option, also known as regular, and there's also the ASC method, also the alternative simplified credit method option. So now I'd like to go into the relevant court cases that have come out over the past 10 years or so and kind of talk about how they impact the R&D tax credit. So this first court case, it's called Souter, and this court case deals with a taxpayer that claimed the R&D tax credit where the CEO was qualified, had qualified time related to development efforts of a product. And really the question was, is the CEO's time reasonable, and is his wages reasonable? So one area that we find is, can you qualify upper management's R&D efforts? So, maybe the first line supervisor is kind of directly supervising the R&D activities, but sometimes it's questions if, the CEO, highly compensated individuals, or owners of the company are actually performing R&D activities. So with this case, it said, some of the areas that this case looked at that we also look at is, what are the work duties of that particular individual? Are they qualified to perform R&D activities? What is their wages? How are they being compensated? Is it reasonable compared to others in the industry? And at the end of the day, it's determined if we can qualify their time and qualify their portion of wages as, R&D expenses.
And we've worked with companies where you see, like Josh touched on, you have your field guys, you typically have your project manager or engineer that's, kind of heavily involved. But when you go up from there, does the COO, the operations guy, or a vice president who has input, can we capture any of their time? Or, for companies that are smaller, that maybe the owner is more hands-on, being able to capture his time can have a significant impact on the credit size. So you can definitely include those wages. It's just a matter of making sure that we can document them to be able to support the time being claimed.
Yeah, there was a couple key points in this case that, again, are favorable to taxpayers. For example, credible testimony was considered a valid method to help document and support the R&D tax credit. And it also says that CEOs, highly compensated individuals, and other senior management wages can qualify as R&D activities. Managers who are kind of above the first line, spending time in the trenches, they can qualify as well. And then, again, written testimonial documentation is supportive for the R&D credit. The second court case that I'd like to cover is GeoSyntec. And this court case came out in 2013. And this court case is all related to the funded research issue that we spoke on earlier. Who bears the financial risk and who has rights in the research and development activities. So for background, GeoSyntec is an engineering services firm. And from 2002 to 2005, they claimed $1.6 million in R&D credits. And that was related to 370 projects, which is quite a few. And so the court held that any fixed price contracts is not considered funded research. Therefore, there is a potential to take those types of activities under a fixed price agreement as R&D activities. The court also said that time and material contracts would be funded research issues, and the taxpayer wouldn't be allowed to take the R&D credit under those type of agreements. So that's one of the areas that we look at first at the beginning of our studies. So this court case was appealed in 2014, and the positions were upheld. And so again, fixed price contracts are a supportive fact pattern to R&D activities, as where this time and material and also cost plus are more challenging, and usually we're a little bit more worried about those ones. And finally, the last court case that I'd like to mention today is Siemer Milling Company. Now, this court case came out just recently in 2019, April 15th, 2019. And Siemer Milling is a wheat flour milling company, and they claimed R&D tax credits back in 2010 and 2011 related to 4 and 5 different R&D projects, respectively. And this is the court case that is really focused on the process of experimentation. And I know we've kind of mentioned that, how that's kind of starting to become a focus of the IRS, and it's all related to this particular case. In this case, the court disallowed R&D tax credits for this taxpayer, and it's because they had no evidence to support that they had tested their hypotheses, they had done computer modeling, trial and error testing, various simulations. And so that's why it's really important that, we look at, we review, and, documentation is maintained to support what process of experimentation your company did to try and eliminate the uncertainties throughout that R&D process.
And the process of experimentation, it sounds this big and fancy word, but I always look at it as, what did you guys have to do to figure out how to successfully complete the project? So, sometimes that's, going through that systematic trial and error process, but, being able to document what you guys were looking at, during that process. So, you're testing out a new way to install or weld a pipe together, knowing what you guys were testing and saying, okay, we wanted to test this type of weld. We did it on X amount of welds or pipe. We found it worked great. We found it didn't work. We tried this. We switched to this method, and really kind of being able to piece, breadcrumb it to where you guys got to a point to where you guys now had figured it out, and it became more of a repetitive process, and that would be where the R&D ended. But you can't just say, oh yeah, we tried it until we found a way to work, to make it work. We need to know what you tried, why you tried it, and as importantly is who was involved in that process.
Well, there was some favorable outcomes related to this case for taxpayers, and really the court rejected the idea that employees had to have a specialized degree to perform R&D activities. So, just like you don't have to wear a white coat to have R&D activities, you also don't necessarily have to have a specialized degree to be performing those R&D activities. So at this point, I'd like to turn it back to Shane to talk about the key takeaways.
All right. Well, like I said kind of at the beginning, we really wanted to kind of give you guys some information that would help, you determine if the R&D tax credit might make sense for your companies. We've kind of gone over, the eligibility requirements, basically, how you guys meet that 4-part test, being able to document the uncertainty you faced, what didn't you know that you had to figure out in order to successfully complete the project, the process of experimentation. So how did you figure it out? Was it done through computer modeling, computer simulation? Was it done through building any kind of mock-up or prototype? Did you do a systematic trial and error process where you're analyzing alternatives and making decisions based on those tests? Which hard sciences were involved in that process? Was there a geotechnical science involved? Was there physics? Was there chemistry? Was there computer science or engineering? And lastly, at the end of the day, what are you now capable of doing that, maybe before you weren't capable of? Or maybe it's something you had done before, but now you're doing it in a different way that's more efficient, more reliable, higher performing. Being able to document those types of activities and then tie them back to the expenses is important. Understanding, the R&D study process in and of itself, and really, the documentation that's needed, knowing which people to talk to, who can give us the right information, and tie those activities back to the expenses, and at the end, being able to document and support the activities being claimed. Reviewing some of the tax law changes in court cases, just to kind of give you guys a background on and kind of the ever-evolving nature of the R&D tax credit, Like Josh pointed out, this last court case just came out here in April of 19, and we see those come out, somewhat regularly. So, every court case can bring a change in how both the government, the IRS, looks at it, which brings a change on how we need to document and support the studies. And then lastly, we just wanted to give you guys kind of an overall view of what the benefit of claiming the credit is, and also what the risks are. The credit's subjective in nature, and really, it comes down to how can you support and document the activities in order to be able to kind of tell the story of how you guys went from, not knowing how to do something to being able to successfully complete a project. And so kind of knowing those four pieces hopefully gives you guys the information to kind of be able to assess if there's projects or activities you guys are taking on that you feel may be eligible. And from there, I would suggest, reaching out to a CPA or somebody that you worked with just to kind of help determine, what the next steps are in order to be able to claim the credit. And I think with that, Emily, I know looks like we've left some time for questions, so hopefully we have somebody or some people that have asked any questions along the way.
Yep, we do have time for questions. If you have a question for Shane or Josh, you can enter that in the Q&A window beneath the slide view. And let's see what we have here. Let's go with, is there a time where travel costs can be included in R&D costs?
Travel costs are typically one of the costs that are excluded. So even if they're part of the R&D process, so you're traveling to go review or do something that's R&D related, supports the development of what you guys are trying to do, there just are a few expenses that the IRS or the law says aren't eligible. One of those is travel costs. A couple others are, rental costs are excluded, as well as any costs related to kind of training or education. Those expenses, even if they're part of the R&D process, just can't be included as part of an R&D expense related to the R&D calculation.
All right, thank you. Can you go back and claim the credit in prior years? And if so, how far can you go back?
You can go back to claim a credit in prior years. And you can go back, in general, up to 3 years. Those are the 3 prior taxable years that are still open for amendment. There are situations where we could potentially go and look back further, but that would kind of be a fact pattern specific situation that we would talk about with you directly.
Okay. If I think we may have some qualified projects, what's the best way to determine if they are in fact eligible and or how much credit they would generate?
Yeah, so that's a good point. So, we've kind of given you the information today to kind of assess if you think your company's performing R&D type activities, but kind of what the next step is. For us, at Moss Adams here in our group, we like to try to perform an estimate. We call it kind of a phase 1 estimate, where we get just some high-level information from the company, have a high-level discussion with somebody that can kind of go over, the projects, give us an idea of what was occurring and kind of estimate, from a high level, again, what expenses we think could potentially fit into the bucket. That typically gives us enough information to be able to assess or estimate, what the credit potential could be for the company. And that way you guys are able to determine, okay, does this make sense to move forward with the study or not?
Okay, and let's go with what gets you the 5% credit versus the 10% credit?
Yeah, that's a really good question. So the R&D tax credit is for increased research activity. So what Congress likes to see is a company is increasing their R&D expenses year over year. And so depending on how much R&D expenses you spent in the past. We usually look at the prior 3 years. It's factored into the calculation in the current year. And that's where you get that, variance between potentially getting only a 5% benefit versus a 10% benefit. So it's a little bit, again, kind of specific fact pattern to your company.
Thank you. Let's see, we still have a couple more minutes left. We don't use a lot of different phase codes to track out our job costs. How would we break out costs that are R&D eligible?
So, we've worked with companies that, from all range, companies that track, very detailed phase code descriptions and activities and really document each vendor and each person working on it, to where people kind of put everything into one or two big buckets. And so, when you're in more of that general, you don't have it broken down into as much detail as maybe, would be optimal. We can still go through that. We're going to rely more on that kind of oral testimony or interview piece. So really, diving into the details of the project with the project manager. Sometimes we even get down to talking to, foremen or superintendents, depending on the company, to get an understanding of what those activities were that qualified and, who was involved, which vendors were involved, and being able to pick those, employees or vendors. Even though they're in a general bucket, we can still, capture the time and expenses that were related to that. And sometimes, it comes down to using estimates as well, which is acceptable by the IRS. It's just a matter of making sure we're trying to be as accurate as possible. So, saying, a person worked, they're in one big bucket that's got, 500 hours, and we think they spent 100 hours in an R&D type role. We could say 20% of their time potentially could be captured. So even if you don't have that detailed, job cost breakdown, we're typically able to utilize, how you do track it. It's just a matter of, once we understand, how it's being tracked, we can come up with a plan or process in order to kind of extrapolate and pull out the R&D type information we would need.
Thank you. Time for a couple more. Is this an annual tax savings?
So the R&D credit is available to all taxpayers every year, but you do need to be incurring R&D expenses. So, we would look at your R&D expenses each year, and then, yes, that can potentially generate an annual tax savings.
Yeah, each year has to stand on its own. So, once you've done a study, say you did a study in 2018 and you're looking at 2019, I've been asked before, can we just update the calculation? And really you have to go back and look at, what happened in 19. Again, document the activities that occurred, tie those back to the expenses in that, because each year does have to kind of stand on its own.
Thank you. And it looks like we probably have time for one more. The term used in trade or business, does that encompass contracts entered into with the federal or state government?
Yeah. We look at contracts pretty regularly, where companies enter into agreements with federal and state government. And we're still looking at those contracts to determine if there's any funded research issues, who bears the risk, who has the rights in the research. But that is something that we run into, and that can definitely qualify for R&D.
Great, thank you. And that is just about all we have time for today. If you still have questions for Shane or Josh, you can reach out to them directly. And we did have some questions that we didn't have a chance to get to. We will do our best to follow up with you after the webcast. Thank you, Shane and Josh, for a great presentation today. And as a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts icon to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.